This is an update on Bitcoin, and it is January 2nd, 2021. It's Saturday. So I received a couple of emails asking if my expectations on Bitcoin are still intact, if I still expect it to go well above the 35,000 level. And I'll kind of briefly review a little bit for those who are just new into the coaching program. This might be the first time you're actually watching some of these videos. If you want to find some of the previous videos where I discuss this particular trade and some of the things, the topics that I'm going to talk about today here, how to identify the phases of reaccumulation. Are we looking at a top, or are we looking at an area of reaccumulation and then another extension higher? Those are the things that we cover on a regular basis, because if you don't understand them, you could be on the wrong side of the trade. You could be, you could be expecting some kind of a breakout. You trade that breakout, and it could be a head fake, and you can lose a lot of money in a really short period of time. So if you want to find some of those videos as we led into this uptrend and where it really all started, I mean, I've got videos in the membership area. If you go into the live coaching call videos, you can see some of the replays, and this goes all the way back to the beginning of December, where we were trading it well before the beginning of December, but we talked about the areas of reaccumulation along the way. And you can see it, I think it was down below 18,000, right around the 18,000 level when we were talking about it initially. So it'll be an interesting opportunity for you to see that what we were talking about when price was right around the 19,000 level on Bitcoin, everything continues to move in the same direction that we expected, even when price was down at those levels. So anyway, everything is still intact. Yes, everything is still intact, but I do want to stress this. I am not telling anybody to buy Bitcoin at this point. This is not a trade recommendation. These are my ideas. These are my analysis. This is my analysis. This is how I'm trading it. And this all fits and is it's all based on the teaching and the educational material inside of the trading course. So everything that I'm talking about, I teach exactly how to do this, and then I update with real live examples so that you can see it as it unfolds as you're learning it. It's important that you expose yourself to as many different charts, as many different trades, as many different setups as you possibly can over and over and over again, and you get the hang of it. A lot of people will look at bar charts, and then they'll look at point and figure charts, and then they think to themselves, I don't understand. I mean, that looks weird. The point and figure, for a lot of people, they think it's just weird. I don't want to look at it. And I get that. I see that a lot. I remember the first time I saw a point and figure chart. My recommendation is that lean into it. Don't pull away from it. Just keep looking at these charts. It'll make sense. The way I teach point and figure and teach you how to find entries and teach you how to find the count so that you can figure out where price is going as a price target, it is vital, in my opinion. It is the one critical lesson and the one critical system that you have to have in place as a trader. Whether you're an investor, a trader, a day trader, a swing trader, you need these skills. Without them, you don't know how long to hold on to your trades. It's difficult to identify when smart money is stepping back into the market and creating another opportunity for you to trade. It's also difficult, if you don't have these skills, to identify if you're actually looking at a top or a bottom. So I use these terms, accumulation, distribution, for those of you who are unfamiliar with it, or if this is the first time you've heard it. Accumulation is basically an area of consolidation at the end of a downtrend. Distribution is basically an area of consolidation at the end of an uptrend. With accumulation, you would expect price to break out and then start a new uptrend after the downtrend. With distribution, you would expect a breakout and a move or a new downtrend after the uptrend. So if you can't identify that, if you can't figure out what smart money is doing, if they're distributing shares or acquiring shares, accumulating, either way, accumulation or distribution. If you can't see that on the chart, if you can't identify that, if you can't see and identify the demand for supply and demand, if you can't see that, it's going to make it very difficult for you to figure out which direction to trade it in. And very often you can get stuck in those head fakes. So you think you see a top, it starts to make a move to the downside, and then it reverses and it goes back up the opposite direction. And you wonder why it didn't work. To pass. That testing phase is taking place for a very specific reason. It's creating a cause. It's creating an opportunity for smart money to either acquire more prior to the next extension to the upside, or smart money is distributing whatever that particular instrument is shares, stocks, commodities, forex, currencies, whatever it is, they're distributing prior to the markdown phase and a new downtrend. So you have to be able to find that, identify that, confirm that. I know that there's going to be testing. The testing very often is done by smart money prior to a move out of consolidation, whether you're trading it to the upside or to the downside. So if we tighten up the charts, we can see that this behavior has happened over and over and over again in this uptrend. Let me go ahead and tighten it up. You get another phase of reaccumulation, another phase of reaccumulation. So it just continues to repeat over and over and over again. So again, this one right here was a little different, a much stronger move than what we've seen over the past few weeks. This was a pretty strong move just in the last few hours. This is, again, a 1-hour bar chart Bitcoin. In those modules, I'm going to break down how you can distinguish between reaccumulation or distribution. So it's very possible that if you saw something that looked like this, you could potentially have thought that this was a top and that price has really overextended. You know, how many times have you thought that? You're thinking, wow, it's really broke out of, this range of consolidation here. It's really far. Let's say it's cleared the 20,000 level and it's back up here about the 24. And you're thinking, I missed all of that. I got to find a trade. I got to find an opportunity. They don't have the ability to step back and see the bigger picture. They don't have the ability to read point and figure so they can determine some kind of a count. Again, my count is clearly above the 35,000 level. I'm not telling anybody to buy right now, of course. You got to wait for a very pinpoint precise entry. I don't want anybody to buy just because I'm saying my expectations are that price is going to go a lot higher than the 35,000 level. So again, please be careful. But again, when you look at something like this very often, and I know because I used to do the same thing. When I first started trading, I would think to myself, wow, this is really, overextended. At some point, we've got to have some kind of a pullback. I need to trade. I want to find a trade. That's what I was thinking when I first started trading, long before I understood these concepts. So by misreading this and thinking that this is a top and that it might give me an opportunity to sell it or short at some point, I could get stuck on the wrong side of this trade quickly as it turns around and breaks out to the upside and goes even further. How many times have we been in trades like that where you think it's an opportunity to sell and it turns around and you're just getting more and more and more negative? And, I know that sometimes people don't want to use a stop. They don't want to admit that they're wrong. I've been there. I've done that. I've made these mistakes. It doesn't work like that. It's not a good idea. I teach you how to read this phase of consolidation to determine if it's distribution, which is, again, consolidation at a high and then perhaps a new low, a new downtrend, or is it a phase of reaccumulation in an uptrend? Remember, accumulation, breakout to the upside, same thing again, reaccumulation right here, waiting for the testing phase, and then breakout. Here's the signal. So let me talk to you about the signal. Let me go ahead and open this up. Not a good idea. Let's go ahead and open this up a little bit more. So here is the buying climax. I mention this all the time to my coaching students, and I tell them in the membership site and the videos again. And I know I harp on this, but it's important that you get as much exposure to this information over and over and over again until it just becomes part of what you do. It's kind of like that training, right? They talk about training in the military. They talk about training in sports or anything. In the heat of the moment, your training should take over. You need to do this over and over and over again until your training takes over. It's important. So here, at this point, I say this all the time, leave it. Leave it once we see and we're able to identify that buying climax, leave it there. Leave that resistance point. And the reason that I leave it there is that as this phase of consolidation, this reaccumulation phase continues, we're going to see testing throughout this process. The testing is very often done if it's going to continue in the uptrend and we're going to get another big breakout, right? Another leg of that extension, that uptrend. That reaccumulation phase is smart money accumulating more for the most part. We see the testing. It has to take place. We've got to give it time. We don't want to immediately get in and sell a reversal. That's not always a good idea. I know that people try that. They try to sell at new highs or buy at new lows, and it doesn't always work. Sometimes it works. And when it works, people are really happy and they think, wow, this might work. This might be a good system. And it's not. That's not how it works. It's much, much better to trade it the way I'm going to show you here. We want this phase of consolidation to continue and to create this cause. Why is price going to break out? When is it going to break out? what would cause this to break out and move higher. Again, smart money acquiring more and getting ready for the next move higher. So again, we've got the testing phase. Here it tests again. We see and pay attention to where the candles or the bars are closing in relation to this automatic reaction low or this buying climax high. I see the overall high. I'm well aware of where it is, but I know where my entry is likely to be. First of all, I'm going to pinpoint my entry on the point and figure chart, but I'm also going to be watching this phase of accumulation, right? Wyckoff, basic Wyckoff price structure. Phase A, Phase B, Phase C, Phase D. During Phase B, I'm usually not going to trade. If it's a bigger time frame, perhaps I can get a few opportunities on, let's say, the 1 hour chart, and I would day trade that. But usually, inside of Phase B, I am not going to trade. It's too choppy. I know smart money's not trading that. They may be acquiring as it forces new lows, but that's what baits a lot of inexperienced traders into thinking that this is a high when price starts to look like this. And then they think, well, maybe we're looking at a high. It's really overextended. Maybe it's going to pull back. I'm going to short this. Here's the last test. Notice where the bars are closing in relation to that support low, which is the automatic reaction low. Now they're starting to close and hold above this level of resistance, which is resistance, old support. And then we get another pullback. And here it starts to break out and move back up again. So let's go ahead and take this out a little bit higher. It finally starts to break out above resistance again. Notice that at this point, prior to this range right here, there were no bars that closed above that resistance. None of these bars, none of these candles closed above this resistance point, this buying climax high, until this area right here. Now I'm starting to see a change in character. Things are starting to change at this point. So I know there's going to be some more testing. I still don't see anything that looks picture perfect just yet. Here's another dip back into the middle of this range, which is very, very common. This is my picture perfect trade. Here's, at this point, the resistance, the buying climax high, right there, now acting as support. Now I wait for a reversal, and then I track volume. There's my reversal candle right here, that green bar. And then, of course, another pullback, but it doesn't go any lower than the last test at that buying climax high, which is now a new low, acting as support. And here we get the next markup to the 34,000 level right here. So at this point, again, I'm not telling anyone to buy. I don't think that it's a good idea to jump in right now. If you've missed this opportunity, wait for the next opportunity. In my opinion, if you've missed any of these trades, you've got to wait for something that looks like this. And this is what I teach you to do inside of my trading course. I'm going to teach you how to read this. I'm going to teach you how to find these opportunities. It is not difficult. It's just it just may be different compared to the way you're trading currently. So it's just going to require you to watch the videos. They're not long, the videos, but it's just constantly exposing yourself to this material. This works regardless of what time frame you're trading off of. This works on a 1 hour chart. This works on a 5-minute bar. This works on a 4 hour and a daily time frame. So if you're working full time, you got limited amount of time to look at the charts, you want to switch this up and start looking at these opportunities just like this. The structure is the same on the larger time frames, the daily, the weekly, the monthly.